Today's guest is Vlad Tenev, the co-founder and CEO of the trading platform Robinhood. This episode is very timely because Robinhood just announced its Q1 earnings, and also to give our listeners some context, it generated $141 billion in crypto trading volumes during 2024, with a 100% surge in the fourth quarter as well. Obviously, that's not Q1, but we will get into the Q1 earnings as well. With that said, Vlad, welcome to the show.
Thank you. Thanks for having me.
To start off, we also like to ask our guests, can you tell us a little bit about what crypto in America means to you?
I think crypto in America has been beleaguered for many, many years. And really, the past administration has tried to make it go away. So crypto in America now, to me, means a rebirth and actually playing catch up and eventually surpassing where crypto has been outside of the US for the past 4+ years.
Vlad, I want to start off with the news. Jackie mentioned it a little bit in the intro, but Robinhood beat earnings expectations, and the platform offers a lot of different options for investors, everything from stocks, ETFs, and then notably to our audience, crypto products. The crypto-related revenue was around $252 million, and that was up 100% from a year ago. Were you surprised by this, and what do you think drove that monumental surge?
I wasn't surprised by it because basically since November of last year, there has been a huge surge in crypto trading activity, not just at Robinhood, but really industry wide. And I think it started with a lot of optimism around the new administration in the US being much more crypto friendly. And I think we've seen that play out. The past administration had been pushing more and more crypto activity overseas, and the stalwarts that were trying to stick it out in the US, such as Robinhood, just got hit by enforcement action after enforcement action. And so that basically ceased, which was very good for the industry. And now we're basically trying to get legislation passed and firm up some of the things that folks in the industry have known about crypto, but just increasing the confidence for companies and then for some of the laggards to start adopting it.
Yeah, Vlad, I want to ask about sort of that period, right? So you guys were very vocal. Your general counsel, Dan Gallagher, has obviously spoken about this frequently, as a publicly traded company alongside Coinbase in criticizing sort of that period of the come in and register phase of the SEC as an exchange. You seem to have been largely kind of vindicated, obviously in sticking it out. We're very appreciative of the work that, you guys have been doing and navigating the Hill. What was it like to go through that period as CEO of a publicly traded company? And it seems like you guys also weren't quite as involved in the litigation phases of some of that. But like, what was it like just in that time?
Yeah, I think we received the wells, but were able to actually avoid having it go further, which was nice. But you have to also take into account that crypto is a portion of our business, and we were innovating across the board in equities trading, options trading, various derivatives, using AI to improve the ability for customers to access the markets. So we had an event called the Lost City of Gold in San Francisco about a month ago, where we announced a bunch of products, including, a new AI trading tool. And prior to the new administration, basically all of these facets of our business were under assault. So the previous administration was trying to ban AI and really basic machine learning as well. They had this sort of like under the radar predictive data analytics initiative that would basically prevent financial firms from using data and technology to offer services to customers. So there were a lot of strange things happening across the board, I would say. And, we had to adapt. Robinhood actually did very, very well in 2024, and we've been able to grow our business through multiple administrations and across different market conditions. I've done this for 10 plus years now. So we started during the Obama administration, grew through the first Trump term, grew through Biden as well. and we've had to adapt, but it's really nice to be talking about how we can innovate and bring new products to market and actually have those products be US centric rather than figuring out how to like ward off enforcement actions and how to defend our business. So that's been much more constructive recently.
Maybe you guys didn't get a litigation notice because Dan Gallagher is your chief legal officer.
I actually
he's a force.
Yeah, I mean he's fantastic, actually, I don't know if I mean the Democratic administration, I think thinks about things a little bit differently. So I'm not sure how much that played into it.
No, you mentioned global expansion, right? I think there was a lot of pressure in the United States, which resulted in companies going offshore, building in Europe, building in Asia. You guys announced that you're acquiring the international crypto exchange Bitstamp, and it's set to close this year. Robinhood's obviously making that continued push into globally expanding much more. Are you expecting the partnership to have a meaningful impact on the US crypto arm of your business as well?
I think it'll help in the sense that, Bitstamp opens up institutional market for us. Right now, it's retail only, and a lot of the industry volumes are institutional. So you can imagine once we have the exchange, we have two sides of the market for the orders that get executed there. The retail, where we have 25 million plus customers in the US, but also getting market makers, algorithmic traders, other participants that can round that out. And that opens up a big new opportunity for us. Of course, there's a big global presence. We can not only do institutional, but we have licensure. Bitstamp has operations in a lot of different countries. And by virtue of integrating the exchange, we'll also be able to give active traders more options, like the ability to transact directly on the exchange, in addition to go through market makers, which we've been rolling that out already, but that can accelerate once the acquisition closes.
I've heard you say in that vein, you want Robinhood to be the number one go-to platform for not just equities, but options trading, crypto trading. Now that there are other crypto exchanges like Kraken getting into the equities market, how would you guys plan to differentiate yourselves from the likes of a Coinbase or a Kraken in just your strategy? And now that we're seeing more crypto native companies come to the equities and maybe even the options market in the future?
Yeah, I think the main differentiation between us and sort of like the crypto platforms is that our strategy is less based around a particular technology and more based around how can we actually serve the full wallet of our retail customer. And so, for example, the crypto-only platforms, they kind of approach their product development as what more can we do using this crypto technology? And that pushes them to, let's do crypto for institutions, let's do more for businesses and process payments, and of course, the retail arm. But I think the difference is that to some degree, if you have a great crypto retail product, that's not in and of itself a huge draw for institutions. I mean, maybe to a small degree, but the
maybe
two
more
don't
so
benefit
these days.
each other. Yeah, whereas actually, if you have crypto and equities and a digital advice offering, a credit card, and banking, for a consumer, it's actually a huge draw that you can just keep all of your money in Robinhood all in one place, and you don't have to deal with multiple platforms, moving money and moving assets between, splitting up your money. We found that having things in one place is a huge value for our customers. And, when you ask Johan, our crypto GM, what product moves the needle for him the most, it's the brokerage business. And, I'm sure Steve Quirk, who's our chief brokerage officer, would say the same about crypto. So, having more and more things that you would normally use another financial institution for in one place is a huge value prop for customers.
Mm-hmm. Some people call that a super app. Is that what Robinhood wants to create?
Well, if you look at our App Store title, you could argue we're already there, right? We changed it from investing for all to FinTech super app, which is kind of funny. There's some business buzzwords, but
yeah, of course.
I think if you look at Robinhood, we've got banking coming, which is going to be an awesome digital banking product that's going to be high end, so like top of market, but also accessible to everyone. We've got what I think is the best credit card on the market, 3% cash back, gold card, amazing digital experience. So you can really do all of your spend on Robinhood as well. We can trade. We allow you to trade, but you can also create a retirement account. You have a digital advice offering. We acquired this company, Trade PMR, that offers a marketplace for registered investment advisors. So we're going to be making that available. If you want a human advisor, you can use that onto the platform. We've got prediction markets now. So really the end goal is Robinhood can be the place where you can buy, sell, or hold any financial asset or conduct any financial transaction. And trading is a big part of that, no doubt, but not everyone trades all of their money. So this will allow us to increase the wallet share with our customers quite significantly.
Mm-hmm. You mentioned banking. Is the goal of Robinhood to become a bank at some point? And I asked this question because I reported last week that at least 25 crypto and fintech companies currently have applications into the OCC to get a trust charter. Is that something that Robinhood would pursue, do you think?
Well, I wouldn't put our goal as getting any sort of like particular regulatory licensure. But we did announce Robinhood Banking, which is a banking product that is going to be going live to customers in a couple of months. And that will offer checking accounts and savings accounts. It'll actually obviate the need for an ATM. So the idea is to actually have a digital banking experience where you don't make any compromises. You don't have to go to a 7-Eleven, even though 7-Eleven's a great convenience store. The cash can be brought to your house rather than having to go to an ATM. So the idea is really digital banking with a really nice interface, but no compromises. But that's different than us pursuing regulatory bank charter because we can partner with different banks to make it happen. And in fact, we're already familiar with partnering with lots of banks, and that allows us to actually get the best rates on interest rates on your cash through just going to the thousands of banks that are out there and allowing them the opportunity to integrate with our customer base.
Did you guys apply for a OCC charter at some point?
Back in 2019, we applied for an OCC charter and we got very far along, actually. But then when we looked out in the future, we saw that the banking ecosystem, which hadn't been all that mature, in the latter part of, for the greater part of the 2010s decade, was getting much, much more mature. So Cash App, for example, and Chime, these companies that got to single digit or double digit millions of customers offering digital banking products, they didn't actually do that via their own charters. They were able to grow and get significant scale by partnering with banks throughout the country. And so at that point, the ecosystem had developed to the point where actually as a financial company, you didn't need the charter to offer a great experience to customers. So we made the decision to withdraw the charter application, and we've been pushing ahead ever since then, just with the partnership model.
Yeah, Vlad, I'm very curious about sort of this marriage of, you guys are obviously a very heavily regulated business by choice. You've done a lot of different lines. You're talking about being able to have kind of customers move assets around. One of the things that we are looking at on the legislative front is obviously, hopefully one day, some progress on this Stable Genius Act, if that's what it ends up being called. Would Robinhood, are we ever going to get USD Hood? Did you guys ever look into a native stable?
Well, we partnered with Paxos and Kraken and a few other great companies on USDG. The dollar global network, which is a stable coin that actually has configurable yield. And the idea would be to pass back as much of that yield as possible to customers. So we're excited about that. And I think that part of the reason why we were excited about doing this consortium approach is that if lots of companies are partnering to bring a stablecoin to market, then it becomes less of a one company thing. So we could get the benefits of having our own stablecoin, but also the benefits of multiple others supporting it, and it not being so much Robinhood's own coin, but it just being a better evolution of digital dollars, which I think is going to be important to increase adoption.
Yeah, you obviously have a very good line of sight into kind of yield and all of the different sort of ways that customers can earn on those assets. What do you think about I guess it was somewhat controversial or an interesting part of the legislation that issuers themselves shouldn't be allowed to produce a yield bearing instrument? Is that playing a large part in this approach to a consortium, or how do you guys navigate that from a product perspective?
Yeah, I mean, I think that without yield, the ultimate potential of stable coins will not be reached. Just think about it as a customer right now, right? If you can get 4% APY holding your cash in a bank in the US, and the stable coin gets you 0, then really the incentive is going to be to get out of that stablecoin position and just hold your cash in the bank. Just because in the US, it's very, very easy. Now, there still is a value prop for people outside of the US where it's hard to get a hold of dollars. Maybe you don't want to go buy, American Express traveler's checks, which people were doing before there were cryptocurrencies. But over time, I think it's going to become easier to get dollars. And so having yield is going to be a bigger and bigger thing. The tricky part is that when you have a yield bearing stable coin, it does start to resemble a money market fund, right? It's sort of like very similar to a tokenized money market fund. And that starts to sort of like merge with securities laws. And that's why I think the stable coin bill doesn't really account for this yet, because they really wanted something quick to get out there to get a quick win. And then the securities laws are going to be really thought through in the market structure bill, which hopefully we'll get through by middle of year.
If you've been in the space for a while, you know that crypto is not going anywhere. Governments are talking about Bitcoin reserves, traditional finance is moving on-chain, and if we're building for the long term, we need tech that's fast, reliable, and ready for everyday use. That's where our sponsor, Avalanche, comes in. It's a super fast blockchain network designed for builders, degens, businesses, and institutions. That's why JP Morgan, Citibank, BlackRock, Deloitte, Off the Grid, Sports Illustrated, and more are already using Avalanche. Want to learn more? Join us at the upcoming Avalanche Summit in London on May 20th through the 22nd. Hear directly from leading voices in the Avalanche ecosystem and learn more about the blockchain network driving Web3 adoption. Secure your ticket at avalanchesummitlondon.com. See you there.
In preparing for this episode, Vlad, I went on my Robinhood app and I noticed that there's like a lot more degenerate meme coins like Trump, Popcat, Peanut the Squirrel. Some of these you may or may not even know. But I guess what is your take on meme coins, and would Robinhood ever go deeper on this degen side opposed to just the typical utility cryptocurrencies and tokens?
Well, I wouldn't tell Trump that you consider Trump a degenerate meme coin.
He called it a meme coin himself. So, I mean, it's the traders. Yeah.
Yeah, I think that it's interesting. Actually, the SEC issued guidance that made it clear that meme coins are not securities, which was a well received, because people already knew this, but there was a lot of money spent on sort of legal analyses, and continues to be spent to try to clarify what the status is of these coins. And because it was never made clear. And actually, the previous administration made statements that they were securities. People were very nervous about this. And I think the opportunity really is, I'm a supporter of all of this innovation. And I think the idea that someone can create a new token, a new asset in 5 minutes or less and tap into a global market with billions or more of liquidity is extremely powerful. And juxtapose that with how difficult it is for a company to go public. Most companies aren't even doing it. There's companies that are worth hundreds of billions, like OpenAI and SpaceX, that are still staying private just because of how painful the process is. You have to talk to investment bankers. It takes 6+ months. You do testing the waters and road shows, and then, maybe you'll go public. Juxtapose that with, creating a coin in 5 minutes or less and having it traded globally. And you can see the power of the technology. And that's why I think it's so important to be able to apply this technology to securities and to companies. And I think that can unlock access to not just retail, but institutional markets overseas. So that's the big policy priority that we're pushing on in DC. We've kind of become the tokenization people. After the crypto summit in Washington, so many people have come up to me, and a lot of them are like, "Oh, we already know how to do it. We can tokenize this," or "We've been doing it for the past 10 years." But the reality of it is it's not actually available in the US, and we run the risk of being left behind if we don't figure out the story there. Right now, basically, everything in crypto besides meme coins, and this is a little bit of a generalization, but it's not far from the truth. In the US, everything but meme coins is either illegal or in like a very gray area, a shaky gray area. So that's why we need the security token legislation to come very soon.
You had a recent op-ed, actually, Vlad. You described a coming revolution in investing driven by tokenization and blockchain. You just mentioned after the crypto summit, you guys have been sort of known as promoting the tokenization side of crypto. What role do you see Robinhood playing in accelerating that shift? And how close are we to seeing tokenized equities or private markets opening every day to US investors? I know this is something that you've talked about previously. We're talking about 24/7 trading now, not just 24/5.
Yeah, I think there's for the tokenization of securities, this is something that lawmakers are getting behind, and the administration generally seems supportive of it. There's obviously going to be details, and there's a lot of stakeholders in the US, including the established financial services companies that might not be as big fans of the idea, but I think the people want it, and there's obvious long-term benefits. So the U.S. will get there. My hope is that we get legislation before August, and if that happens, that's great, and that's a big part of it. The second thing is accredited investor rules. So basically, accredited investor rules prevent retail from investing in public companies unless they meet certain income or net worth requirements, which effectively shut out 80% of the investing public. And these laws were created back when there was a real problem getting information about different assets and different companies. This was like pre-internet, so there wasn't a lot of information out there. The conditions under which those rules made sense no longer exist. You have lots of information out there. You have AI, and you also have things like meme coins, which we were discussing earlier, where, if you're a retail investor, you can access meme coins freely, and there's hundreds of thousands of them created every single week. So it makes even less sense in that context to have such restrictions on retail investors investing in private companies. So there is momentum behind that as well. And it's one of the things we're most interested in and working towards. And my hope is that I think it might happen outside the US first, but my hope is that the US isn't far behind.
I want to follow up on some of those conversations. Obviously, the crypto task force had its last roundtable on Friday around custody. Not the exact issue we're talking about, but one of the things that came up there was, do we need segregated wallets? Do we need is Omnibus okay? What are some of the impacts here? And you guys are obviously very familiar with traditional settlement, right? You're talking about kind of disintermediating and that sort of historical system where we needed somebody, to take the share and, put it over there. And then you have kind of the traditional T+1. Instant settlement, I think, is viewed by some in the industry as a feature or a bug, kind of depending on how, it impacts your business. What do you guys think about, is that just another sort of tradable asset, or how do you think about kind of instant settlement and how it may impact the way your world sort of operates?
Well, you might remember in 2021, we had the whole GameStop situation. And after GameStop, I basically called out the fact that settlement was T+2 for or T+1 for T+2 for U.S. equities, and that was a big problem at that time because basically you had to hold cash collateral for trades for 2 days after those trades were made, and what that meant was the firms like Robinhood had to put up corporate cash. We're not even talking about customer cash, but corporate cash for the time to match the settlements during the period. And as activity increased, and this is like fairly low risk activity. I mean, we're talking about people fully paying for their securities and buying. So the risks are honestly quite limited, even though there are some edge cases where maybe they would be more significant. And all of that is due to this settlement delay. So not everyone is a fan of instant settlement. There's firms that actually hold these securities and hold these assets for multiple days. They hold the cash and they earn interest on it. And they can kind of like net things in and out intraday that they would have to otherwise transact and borrow. But I'm certainly a fan of it. And I was arguing for instant settlement. We're T+1 now, which is a step in the right direction. But I think we have to get to same day and eventually real time for US equities. On-chain transactions, obviously it's instant already. But I think equities, it'll be a major improvement.
Absolutely. Can we explore that a little further? Because I think, obviously you have really valuable perspectives around everything that was going on that time. Just to sort of like game it out a little bit, for our listeners and for our benefit as well, what would that week have looked like for you guys if you were able to actually do instant settlement? I mean, or are we just not even having, that conversation? Like what would that have looked like?
Oh, yeah. I mean, basically, if you have instant settlement, there wouldn't be a need to hold collateral for trades during the settlement period. You would just take the customer's cash, send it to whoever's selling them the stock, and send the stock to the customer instantly. So it would be like real-time payment.
Yeah, one of those rare crypto actually does fix this kind of cases. That's great.
Yeah, actually, I've become, at the time I was like, you probably don't need crypto. We could just make the current databases run faster. But that's very hard. A lot of this technology is running on mainframes and still using paper kind of in the critical path. There's certificates. We're not too far removed from stock certificates. So I actually think crypto does pose a great solution. And this hopefully won't be visible to customers either way. It's kind of rare when customers become exposed to the inner workings of the settlement cycle. But indirectly, it will lead to more efficiency and lower costs for the firms offering these services. And that'll eventually make its way to lower prices for customers.
I want to take a trip back down memory lane. Obviously, you guys talked about the GameStop situation, but I remember maybe it was like 2023. Robinhood has had like a very interesting relationship with crypto over the years. And now that the SEC is a little more hands off with you all, seemingly, I remember back though in 2023, when the crackdown was just insane across the industry and Robinhood delisted, Solana, Polygon, and Cardano, given that I believe it was just you guys wanted to make sure you were like within regulatory guidelines and so on, but maybe you could say better than us. But when you think back to that time when these crypto assets were first listed and then some were delisted, what was kind of going through your mind back then? Did you just want to make sure, hey, we're doing this compliantly, or what were the frustrations like?
Yeah, so we have a listing committee that deliberates on all of these things, and I'm actually not on the committee. The intent is for me to not be able to influence. I shouldn't just be able to say, oh, I like so and so coin, or I don't like
go
some
put it
other
up.
coin. It has to be sort of like impartial and rules based, and so we have a committee that looks at these things. And I think at the time, because the SEC had taken the position that those assets were securities, the committee made the decision, and I think it was a tough decision to delist them. That was a hard time. At that time, a lot of firms actually left crypto altogether. They decided to either divest or wind down their crypto businesses. And so, we felt like obviously one of the few that were sticking around with it and continuing to invest in it, which, wasn't easy as a public company that had so many other businesses that were directly or indirectly regulated by the SEC. So yeah, it was a challenging time. And I felt like we were spending more time thinking about how to sort of like manage the relationships with the SEC than thinking about how we can, help make our company and our industry number one in the world and make things better for customers. So, it was unfortunate to an extent, but, we also did well in 2023 and we grew our business, but, it would have been much better had we had a more conducive environment. But that was also 2 years ago, so I don't think about it very much anymore.
You moved on. You've thought about new things.
It's like 12
I know
years
you weren't on the committee. Yeah, it's a bajillion years in crypto. You weren't on the committee though, but would you have done it differently, or you agree with it?
I'm not sure I would have done it differently had I been on the committee. Yeah. And you remember at that time, Solana had the whole like Sam Bankman-Fried situation. So I think that the committee made a reasonable decision given the information they had.
I want to switch gears a little bit, Vlad, to talk about the M&A space. Now we're seeing the regulatory headwinds turn into tailwinds, as it were. There could be a lot more consolidation in this space. I mean, we saw yesterday, apparently Ripple put a bid in for Circle. Now that could be a very interesting matchup. Stripe purchase Bridge. Do you see Robinhood getting into other areas or making noise on the M&A front?
Well, we have
aside from the Bitstamp.
Yeah, which makes us the longest continuously running crypto exchange when that closes, which is kind of fun to be able to say. I'd say we have an active corp dev team that are always on the lookout for opportunities. Our general bias is towards building things in-house, and but the corp dev team's doing a nice job. And whenever we find a team that we really like, that we feel shares our DNA, and whenever we can get significant acceleration on something that we already intend to do, corp dev has proved very, very useful. So credit cards, one example, where we acquired the X1 team, which became the Robinhood Gold Card. Bitstamp, obviously another one. So you should expect us to continue to be active. We have resources, we have a great team, and I think we can do more. I'll also say, the team that's building crypto technology and building products has been doing a nice job too. And we're doing our first crypto event in the south of France in a couple of months. So there we'll be announcing some new products and new initiatives. And I think that'll be a fun event.
Oh, that's awesome. We're definitely going to go. Okay, team, we're going.
Yeah,
Exactly, yeah.
There's worse locations for sure.
Yeah, for sure. Can I just get your take on the potential acquisition of Circle by Ripple? I mean, it's payments, stablecoins is such a hot space right now. Obviously, we're seeing legislation that's probably going to be passed at some point this year, hopefully before August. What could that do for the stablecoin space, especially as someone that is part of a consortium that's kind of trying to compete along those lines?
Yeah. I don't have any specific thoughts. I think generally what you see when two companies of like fairly large size do this type of acquisition or merger, it's rare for that to be a net positive for product velocity and innovation. They're going to end up like spending a lot of time trying to navigate the legal details of making the merger happen, integrating the systems to whatever extent they integrate them. So I think like the best cases of this type of thing is where the two things just like keep running independently for a long time so that there's less disruption. But again, I'm not in the details. That's just a general observation of what acquisitions tend to do. It's actually quite rare that things accelerate, at least in the near term. And the best case scenario is to a customer or sort of like other folks in the industry, things continue on a positive trajectory that they were on in the past.
Yeah, I think that's a great point about opportunities where they make sense, obviously, for business models, companies teaming up. There also, I think, was supposed to be, prior to this administration, a sort of flurry. The IPO window was going to open back up. The M&A sort of space was really going to accelerate. And it seems like obviously there are deals to be done. It's, you mentioned companies like you guys with resources. There's definitely good opportunities to be had, but we haven't really seen that velocity pick up in the way you would expect. Do you think it's just partially volatility, or do you think we're going to get there? Or are we just going to have to change all the rules so you can trade, your secondaries, your tokenized secondary funds on Robinhood? Like, what do you think is?
Well, that would definitely that's sort of like my dark horse contender of what could disrupt the traditional IPO, because I actually think once a system gets to a certain level of cruft, it's hard to kind of like reform it from the inside. And maybe there can be some reforms that make it a little bit better, but an alternate path is somehow always easier, because, it's small at first, it's niche, but then more and more people start using it. It becomes useful. And, at some point, it's an alternate path. So I do think tokenization can provide an alternate path, and that makes it very useful and very interesting, because I'm not super confident that we'll be able to make the IPO itself much smoother and easier, like it was perhaps in the 80s when companies like Microsoft would go public at hundreds of millions valuation. But I do think still larger companies are interested in going public. There was a big pipeline of companies that wanted to go public at the beginning of the year. Of course, the macro has kind of like affected that, at least temporarily. But I think now you're starting to see a little bit more calm, a little bit more optimism in clarity for the operating environment. So I wouldn't be shocked to see some of those that have been paused actually resume. So we'll just have to see how that goes.
I'm really curious about your perspective on so you mentioned you guys starting in 2018, during the Obama administration. Reg CF, the Jobs Act, was obviously one of his administration's policies, and people, particularly in our industry, have a lot of feelings about the shortcomings of that legislation. Reg A plus, can end up being just as much of a pain as a traditional IPO. Reg CF, creates a lot of issues. What would you like to see, from a like market structure would be fantastic, But are there any more specifics you can give us on like how you'd like to see those laws change?
Yeah. I'm a big proponent of self-certification for accredited investor rules. So basically, if you really say that you understand the risks and you kind of like understand what's happening with the company, I think by and large, you should be allowed access. I think that could also be coupled with sort of like new rules and regulations for brokers that offer these assets. And you can kind of look to Pink Sheets or OTC as inspiration there. You can imagine a multi-tiered system of listings based on the level of disclosure that the company chooses to partake in. So let's say, for example, you're a startup and you don't want to make any disclosure. Well, maybe we put like a red skull and crossbones when we're sort of like presenting that asset to customers. And it's sort of like trade or invest at your own risk. This company doesn't present any financials or any information. And it's like a scary red, like skull and crossbones that, really makes it clear that you're on your own. And if you're a company that's like a late stage private, say SpaceX or OpenAI, audited financials, then maybe you can graduate to a different tier. But there's straightforward solutions to these problems. Basically you want to make sure customers have clear information, that they're not being misled, while also understanding the reality that you can invest in any meme coin you want. And, I don't know what the status of their financial disclosures are, but I think that these two things cannot coexist in the same state. It doesn't make any sense.
Before we were talking about kind of the IPO market, and I've heard the conversations as well from either companies that are publicly listed that want to get uplisted to a US stock exchange or just want to get an IPO in general. And then you also brought up the topic of tokenization, which we've talked throughout this episode on. And I want to ask you more, Vlad, about like what you see as this true vision for tokenization. I know in the past you said it can unleash true power of the crypto revolution, but what does that crypto revolution really look like to you? And how do you see tokenization ramping up the crypto industry to maybe new levels?
Yeah. So I think a good analogy is stablecoin adoption outside the US. So outside of the US, if you're in a country with a rapidly devaluing currency, and you just want to get your hands on US dollars, it used to be kind of hard. You have to go to like a tourist area where you go to a store or a kiosk to do a foreign exchange transaction. You have to bring physical cash. They're charging you, 10% spread on that. And it was just painful. And, or you had to buy, American Express traveler's checks, which were useful to a lot of people in these developing countries as a store of value. And last year, there were reports that stablecoin transactions globally actually surpassed the transaction volume of major payment networks like Visa. And a lot of that is driven by people that want to get access and exposure to dollars. And they already have, crypto wallets and crypto exchange accounts. And this has just become an established on-ramp. So crypto technology has been kind of counterintuitively the best way to get a hold of dollars for people outside the US. Now, I think in the same way, the same properties hold for crypto securities. If you want to invest in a US company, whether it's public or private, the same mechanisms that make it easy for you outside the US to invest in, to hold US dollar stablecoins can make it easier to hold US dollar securities. And that's going to be good for people outside the US because they could actually get access to these great companies. It's good for the US companies because now you have access to a global pool of capital in a global market that should improve liquidity. And on the earliest stage, I think it's great for entrepreneurs because if you can make raising capital for a new venture as easy as, launching a meme coin. You just press a button, maybe upload some information, create some information about your company, and suddenly you get access to this global market. That would have been useful for me starting out as an entrepreneur. I remember when I was starting Robinhood in 2013, we raised capital. We raised a convertible note seed round at a 10 million valuation cap. And we had to talk to everyone because nobody wanted to participate in this financing. It was very risky. We were very early stage. So it took us months to get this thing done. We probably talked to over 75 investors. And at one point, we put Robinhood on AngelList. And so you could invest at Robinhood at 10 million valuation on AngelList. And we took all comers. Like, we would pitch, individuals from the Midwest who had just, wanted to throw $10,000 to $100,000 into startups. We would pitch them just like we would pitch an Andreessen Horowitz or a Google Ventures. And if they wanted to invest, we gave them an opportunity. And I just think probably 3/4 of my time was spent on this. If I could just press a button and have that service give me capital, that would be unbelievable. And the time at the earliest stages is the most valuable commodity. I mean, you have a small team of under 10 people trying to bring something to market. If you could reduce the fundraising burden, that would unlock an immense amount of innovation in this country. It would make it easier to start a company.
Yeah. Knowing what you know now after going public in 2021 and going the traditional route, but then also the vision that you have for the future in ways that crypto can change the raising capital process, right? This could be a totally revolutionary new thing for companies looking to get capital. What advice would you have for crypto companies, maybe say like the Circles of the world or the Geminis, who are looking to go public the traditional route? As someone who's done it, do they even need to do it at this point? What would you recommend?
Well, I mean, no alternate path to getting the benefits of being a public company exists right now. So, I wouldn't tell them to necessarily hold out for some new disruptive technology, because I think that's very, very uncertain. And, different companies have different needs that are motivating going public. So I don't know what their particular situation is. Some companies have said they plan to never go public or not for the foreseeable future. And you have OpenAI and SpaceX that are worth hundreds of billions and, multiple decades old at this point, that have been able to do well and fund their businesses and operate well as private companies. So it's very, fact specific. I think for my personal situation for Robinhood, it's been very good because a big part of our business is public markets. I mean, we're Robinhood Markets. We started off offering access to U.S. equity markets, and we believe in retail being able to invest. And I still think to this day, U.S. equity markets are the best. Among the best, if not the best, wealth creation engine. So we're big supporters in that. And we think that they're very, very powerful and very good. And so as a company offering that service, I think it probably makes a lot more sense for us to be public than, your typical other company.
Yeah, I want to touch on that. The idea of this sort of large, deep markets in the U.S. We've been talking a lot about tokenization, having traditional sort of assets, underlying, like run on crypto rails. But there's also been a pretty significant push over the last year or two to get sort of traditional financial markets, synthetic or direct exposure to crypto assets, right? So, there's obviously like MicroStrategy is one of the best known examples of this. There's, Sol Strategies that's, doing essentially publicly traded synthetic validator exposure. Canary Capital yesterday just announced another ETF that they're going to file for SAY. Do you think we're going to continue to see maybe more exposure in sort of TradFi markets and those types of wrappers and vehicles for crypto assets? Or do you think tokenization will happen faster? Or how does that impact, your business?
Yeah. And, you didn't mention the futures markets, but like Robinhood launched futures outright trading recently. And crypto futures products have been very popular, right? And so now, it started off with Bitcoin and ETH futures. Now there's Solana futures. And these are, closer to crypto in that they trade 24/5, but still very much a kind of a traditional financial market. And Robinhood offers all of these products. So however you want to engage in crypto, whether it be through equities, spot crypto, futures, and equities being, the crypto ETFs, we'll offer that to customers. And I think that in a free market like we largely have, these things will continue to merge. Whenever there's a capability of someone to create a crypto ETF or, a tokenized ETF on crypto rails with traditional assets, you'll start to see that, and the best products will win. And I don't necessarily have a prediction of how this will go, but I'd love to see lots of things being tried. And I think generally that'll lead to better products and better financial outcomes for customers over the long run.
Mm-hmm. We started this episode talking about Robinhood's recent earnings and also mentioning that Robinhood's crypto trading volumes was 141 billion in 2024. I know you said you're not going to predict anything, but for demand on Robinhood, where do you see the most opportunity to really tap into this market going forward?
Yeah, I think Robinhood, maybe idiosyncratically, is great at the intersection between crypto and traditional assets. So, we have a scaled business on the crypto side. We have a scaled traditional brokerage business. We serve, 25 million plus customers in the US. So in areas where crypto and traditional finance merge, I think we have a unique advantage. We've got the customer base and also the engineering expertise across both of those. That's why I'm interested in tokenization. That's why we're making progress in on and off ramp technology. So we have a product called Robinhood Connect, which is a great on and off ramp provider. We partner with a lot of the non-custodial wallets like MetaMask, Uniswap, Moonshot, as an example. And if you want to bring dollars onto crypto rails, you want to on ramp, you can actually use Robinhood through one of these products. We want to build, I believe we pretty much already have the cheapest and most effective on-ramp and off-ramp. And we're very interested in continuing to make that product better and generally looking at areas where crypto and traditional finance kind of go together and offering great solutions, both to retail and to businesses and institutions over time.
Speaking of crypto and traditional finance merging, there's this trend lately that's accelerated quite a bit, which is the trend of companies, traditional companies, putting Bitcoin on their balance sheets, actively buying Bitcoin. MicroStrategy, Gerald mentioned that before, is obviously probably the biggest player in that space right now. I was actually in an event last week that was just entirely dedicated to corporations buying Bitcoin. Is that something you see Robinhood doing in the future? Is it something that you think could benefit Robinhood?
I think we've shied away from that in the past because, I view that as basically managing an investment firm within, within Robinhood. And not that it's a bad idea necessarily to manage an investment firm within Robinhood, but our goal is to build products that customers want to use and to make Robinhood itself the best place for you to keep all of your money and to process all of your financial transactions. And so it's a little bit ancillary to that. We could probably manage a great investment firm, but any time spent thinking about that is probably...
Is that the next thing, Vlad? Robinhood investment firm? Taking over the world.
Yeah, no. The next thing is rolling out banking. So
right.
In the crypto event.
And you guys have sports betting, right? You just rolled out sports betting? Am I...
We have prediction markets.
Prediction markets.
Sports is a big category there.
Different, Ellie.
Very different.
Sorry.
Yeah.
Just like I think of one of the same. Anyway.
No.
How has that been going?
It's been going really well. We announced that the prediction markets offering, and sports is a component of that for sure, but we also have economic indicators. We had the elections. So we had, the presidential election last year, which was our first prediction market. We also have gas. So you can predict the price of gas, which is a fun one. And we've traded over 1 billion contracts in the past 6 months since the launch. So we're doing more. Obviously, we're going to do more in sports. We've got the NBA and the NHL right now. We did the Masters. We did March Madness. So that's obviously a huge market. And there are speculators. Obviously, there's speculators who are, going in and out of these contracts. But prediction markets have a great societal benefit too, which is, I think of it like the evolution of the newspaper. People look at SportsCenter, people look at ESPN when they want to figure out what the scores are. There's still a sports section in the old newspaper you can buy at the store. So this is like that, but you get the information before it happens, which I think people are hungry for, and that's what makes it such a interesting product. So we're going to continue to do more. It's sort of a nascent asset class, but we're seeing a ton of engagement from customers.
Mm-hmm. Yeah, I joked before that they're different because I see the similarities like you just mentioned, but they are separate sectors. Like there is a betting component, but it's different.
I think there's certainly overlap in how customers see them, but I think that if you look at some products like Polymarket out there, I do think there's many qualitative differences between how customers see those and the traditional sports books.
For sure. To wrap things up, Vlad, aside from everything that we've touched on today, what is something that you're watching and interested in that you think others should pay attention to as well?
That's a great question. I think that besides cryptocurrency, the other transformative force that could affect financial markets is AI. We haven't really talked much about that, but I think there's like these two things that are simultaneously happening. Increase in cryptocurrency adoption, and also people spending more and more of their time and energy and their attention kind of engaging with AI and having AI do things for them. While at the same time, the models themselves are getting better and more capable. So I think that's going to be a big force in financial services in the next 5 to 10 years. And pretty much all of the areas where you're engaging with a human right now are going to be augmented by AI. So you'll be able to get more information in real time. You'll be able to synthesize things. We're rolling out a product in the next few months called Robinhood Cortex, which is our first AI product that helps to answer two very, very direct questions. One is, why is the stock that I'm looking at moving, and what's fundamentally driving that? And also, if I have a viewpoint on a particular stock or asset, what are some option strategies that I can construct that are capital efficient ways to capitalize on that viewpoint? So, we'll start with those, but then you can see it expanding into the full active trader workflow, while also kind of like replacing and augmenting a lot of the internal operations. So maybe it won't be visible to customers, but it'll lead to faster response times, a better user experience for customer support, and for everything that happens behind the scenes. And I think that'll affect customers tremendously as well.
100%.
Is there a world, just quickly follow up, is there a world in which you see AI maybe taking the role of recommending stocks, recommending investments to traders, say what out of this stock portfolio stock, maybe what's going to be the best performing, and it does all the sort of the mathematics and what traders do for you now, just in AI. Do you see a world where that will happen, and maybe incorporate that into Robinhood at some point in the probably not very near future, but maybe sometime in the distant future?
I mean, you can already do this. You could open up ChatGPT or Grok and ask it to recommend you some stocks, and it will do that. Now, I think the question is, are people going to trust that? And is it going to be any good? And I think that's a bigger question, right? We rolled out a product at our Gold event called Robinhood Strategies. And the idea behind that is, if you want to be completely hands-off and just basically have a button where you put in dollars and that bucket is like optimally managed to your risk tolerance at the lowest possible fee, we can offer that to you. And 40,000 plus users have onboarded to Robinhood Strategies. We have over 100 million managed in that product just in the first couple of weeks. So it's getting really, really good growth. And so then the question is there something along that spectrum from fully hands-off to you have complete control over your entire trading experience that's interesting to people? Is it maybe like hands-off, but you provide a little bit more input, a little bit more customization? You say, I really believe in AI. I want you to be like AI heavy for me. But yeah, I think the real question is not the capability. Like I said, ChatGPT will give you stock recommendations. So will Grok. You can get them, but are they any good? Are you going to trust them? And are they going to be better than the recommendations you can come up with yourself? Those are, I think, the big questions.
Yeah, I know we're running out of time here, but I'm very curious. Like, do you think, we've been talking about changing some basics, and we haven't really covered the Investment Advisors Act. Do you think we're going to need to make some updates there if we want to accommodate this kind of technology?
Yeah, I think there's definitely a lot of areas where there's kind of intersection between AI technology and the traditional financial rules, and we're going to have to explore that. And does that mean models getting licensed? What does that mean for agents? Is it like agents? Is it humans actually using the AI tools to increase the throughput and the quality of their work by 100x? And I think that's a viable path, right? If a human has to review part or some of the output, but the AI is just augmenting what they're doing by 100x, I think a lot of people are on board with that. So I think we could benefit from some tweaks of the rules, but even the existing rules, I think, allow for a lot of innovation.
Yeah, 100%. Vlad, I feel like we have to have you on for another AI crypto episode.
Happy
Definitely.
to do it.
Yeah, next week, exactly. Yeah. Well, thank you so much for coming on. We really enjoyed having you.
Yep. Thanks for having me. Cheers,
Thanks,
guys.
Vlad.
Thank you.
Thank you. Appreciate it.